Welcome on board Dipan Mehta as well and find out what he's making of the market right now. Dipan, just when you think afternoon firstly that the market is getting a little toppish, it moves a little bit more, and now it's the private banks which have clearly, taken the charge upon themselves. But what next? Do you think it's time for some consolidation ahead of the budget or in the run-up to the budget at least?
Good afternoon, and thank you for having me on your show. I think we are seeing consolidation underway, and this is the full power of money coming to the markets, which is visible on the screens over here, that there's not been a reaction or a steep correction for many quarters. And it may continue like this for many more quarters ahead as well, because there are no triggers for the market to correct. I think we are in complete blue sky scenario, which I haven't seen in years or decades, if I may say. And I think irrespective of whatever comes in the budget, the markets can only scale higher and higher, and valuations can only go higher and higher because because of the force of the money which is coming into Indian equities. And fortunately, or whichever way you look at it, depending on whether you're a bull or a bear, there are not so many mega IPOs also happening. And whatever supply is coming in from of QIPs or promoters selling or new listings, new IPOs, all of that is getting more than easily absorbed by the quantum, or I would say massive quantum of money coming into our equity markets. So this is no longer markets going up on purely on fundamentals. It's a market going up because of the force of liquidity which is coming into it.
Okay, so liquidity is one factor which is definitely impacting the market mood right now. But the other thing that the market is expecting a lot of focus with respect to the rural recovery in the budget. And I would just want to run you through of some of the details that we're getting in from agencies. The exclusive sources picking up that India is planning to hike rural housing subsidies to $6.5 billion. And this after, this is an uptick from $4 billion, which was there earlier. And even with respect to the other upticks which are expected in the other, programs as well, government is likely to hike allocations for rural jobs program from earlier estimate of 860 billion rupees in the last year to a further amount which is higher than that one. The finance minister is expected to provide that fillip in the budget, which is expected to be around the corner, maybe somewhere between 20 to 25th July. But the underlying theme, Dipan, seems to be the fact that rural recovery is high on agenda, is a high priority item for the government right now. If you really had to play that theme of rural recovery, which is the best way to play that?
I think the best way to play that, as well as a good monsoon, is the agrochemical companies and the fertilizer companies, say the likes of Zuari or Coromandel International, stocks like that. There's Dhanuka Pesticides also, which comes to mind. PI Industries, which is a great company which is focused on contract manufacturing for global markets and has got a very solid India business as well. So I would say that rural recovery and good monsoons are the best way to play would be to these two companies. And then, of course, in auto, there is Mahindra and Mahindra, which is India's largest farm equipment company. And mind you, tractors and farm equipment have been a laggard. And despite that, the company has displayed such exceptional financial performance. So when actually the tractor market also starts to move higher, then that also will start to contribute to the company's top line and bottom line. So there are a few choices for investors available when it comes to a rural play. I would even add microfinance companies to the list. They are also trading at extremely attractive valuations. And there are a few pockets of concern about loan waivers. That ugly trend has raised its head. But, the microfinance industry has been dealing with it for the last several decades. And I'm sure this time around also they will be able to manage that particular risk factor. But these are all companies I feel which have, if you see the last 3-4 years, maybe the exception of M&M, they have broadly underperformed the market. But now I think there are solid triggers in place for them to start outperforming.
Okay, that's the take coming in on some of those buzzing, trades right now. In the meantime, just take a look at HDFC Bank. While that stands tall by about 2%, Kotak actually has been quite the intriguing chart today. It started off down about over 1%. From there, saw a recovery, and now it's, by the way, overtaken HDFC Bank as well in terms of a percentage move. It's sitting at a gain of nearly about 2.5% or so. That's 41 points up in the green. Tata Consumer, of course, has been a very strong show today. That continues to scale up. A near about 4% move is what you're seeing on that stock right now. Naresh, let's get the chart reading of Tata Consumer at 1146.
The stock has been sideways after that massive move in 2023 from sub 700 to 1250. For now, it was drifting lower after a gap up. So 1160 is where the major swing highs are. If it sustains above 1160, that would be a short-term breakout. Technically, the consolidation has taken quite a few months now. So the longer-term trend is still positive. Above 1160, it again opens up a move possibly to 1250 again.
Right. Dipan, what is your own sense on the FMCG plays? Would you say that this is just a tactical move, or would you say that there's something constructive here and there are more legs to the rural recovery play?
I'm sorry, I didn't get the message. Which we're talking about which industry?
No, I'm just talking about FMCG at large.
Yeah, of course, FMCG also benefits from higher rural spends, and there could always be, premiumization play in the rural markets, up trading instead of down trading, which may benefit FMCG stocks. But, I'm not a great fan of FMCG at this point of time. A lot of their categories are, I would say, mature categories: soaps, detergents, hair oil, shampoos. I think, more or less the growth rates will be in line with population growth rates. And I'm not that bullish on these companies. We want to buy businesses which can grow at a solid 15-20% type of top line growth rates. I don't see that happening in a lot of the FMCG stocks, so I would like to avoid them. And as I mentioned earlier in the show, that there are many choices when it comes to rural play. I mean, you could even add two-wheelers to the list. And as I said, fertilizers, pesticides, M&M. So there are so many choices which are available, and I would say focus over there than the FMCG stocks.
Point taken. In the meantime, just wanted to highlight that BHL has actually managed to pile on more gains. When we were talking about that $33 billion equipment ordering that might happen this year, that stock was up 3%. Right now, it's trading with a gain of 5%. And even Thermax, it was fairly quiet at that time when news hit the screen that there could be this additional ordering of $33 billion dollars coming in, and government is pushing for that. So that stock is now reacting positively, up around 3%. But sticking to the theme of two-wheelers, a big disruption perhaps, which could be for the two-wheeler industry back home in India, is the launch of the first CNG bike, and that's expected to happen on 5th July from the house of Bajaj Auto. We've already seen the first glimpse, which is up for you on the screen, but what does the management have to say about what could it mean for the industry, what could be the potential name, what are the other features to watch out for? Listen into the conversation we had with Mr. Rakesh Sharma of Bajaj Auto.
It addresses a very large market size. Almost 70% of the 1 million per month market of motorcycles is got some level of sensitivity to fuel economy. And our whole effort was that we have to make a significant difference to it. Bruiser was the code name, and that much I can tell you that it is not going to be Bruiser. The brand name is something else. It's an evocative brand name, and it's going to be something else. It's a bike, like I said, which has got a very standout style. And then it has got biofuel capability in the sense that it has got both CNG and petrol. So that brings in a large amount of reassurance. And secondly, it also increases its range. I can also tell you that we will start with one or two products, but we intend, depending on how this thing is received, the pace at which it is being received, we intend to widen the portfolio.
Okay, that's the management of Bajaj Auto ahead of that mega CNG much-awaited launch. But Kunal, on the charts, which of the two-wheelers are looking strongest right now, and where is it that you feel that there's opportunity to still buy in?
So it's only Bajaj Auto which is looking the strongest as of now. Eicher Motor has gone through a correction, and it looks like that the stock is, broken some neutral zone on the indicators on the downside, which means that the stock can, particularly go into a drag further. Hero MotoCorp has been a lot more sideways. The stock has been stuck into a range just about that 5,500 mark. So I think over the last 4 or 5 days at least, the stock is trading into a band of 150 points, which is just 2% to 3%, and that too at a point where the markets and the indices are doing pretty much strongly for themselves. So I would probably believe that Bajaj Auto is the strongest name from the pack. The stock, I think had a touch and go moment towards the 10,000 mark just about a couple of weeks back. And I think at 9,400 mark, the stock has also come back towards a 50-day moving average. So the risk to buy or to initiate a buy is a bit more attractive.
Okay, point taken. So Bajaj Auto, one of the strongest two-wheeler names, at least on the charts right now. Dipan, you've been associated, of course, with the markets for a very long time. What do you make of this latest SEBI circular coming in on uniform pricing? Do you think this could have long-lasting, damaging impact with the kind of, zero brokerages and discounting going away? And do you think that could hamper the investment environment in the country?
No, not at all. In fact, it will go a long way towards improving the investment and trading environment, and it provides a level playing field, and some of the practices which were not so desirable, they will get curbed. And on the whole, I think it is very positive for the even for the discount brokers. It is positive because then they will look at charging in a more fair manner and a, I would say, more transparent manner. And it's not the only source of revenue for brokerages, but they will work around it. See, the broking industry has had so many challenges in the last 15, 20 years, and still has gone from strength to strength, all thanks to the market. So this is a great time in the for the regulator to make such changes, because we are in a bull market situation, and all of these damages and costs can get easily absorbed. So it's a step in the right direction. I completely welcome it. There will be a few brokerages which will be impacted, but they are very strong, and they will find ways and means to cover that revenue gap.
Right, okay, that's the take coming in on some of those brokerage names. Let's just bring up Angel One also once again, because yesterday, of course, the stock was starkly lower. Today, while it's recovered and it's off the day's lows, but it's still not recovered back into the green, barring that starting point in trade. What else has been moving up today? Titan, of course, is in the red. Reliance, like we told you. L&T is taking a bit of a breather today. There's HCL Technologies, Bharti, all flat in trade. Not much a move coming in from Sun Pharma either. And then, of course, I want to see what the IT pack as well is up to, because one can see TCS is in the red right now, LTIM a little bit soft, and that's pretty much the case with HCL Technologies as well. Whereas Infosys, that too will just come up for you on your screens next. Dipan, any high hopes from IT this quarter? Do you think that finally the earnings could have bottomed out?
Difficult to call. Let's just wait and watch. We are getting into earnings season. IT is always first off the block. And let us see what the managements have to say. I'm not going with great expectations. I think that software service companies are more of a 25, 26, fiscal 25, 26 story. And some of it, some amount of buying will come before that. But the real earnings growth will come only in the next fiscal. And most importantly, I think as we did in the last earnings season, we should be tracking how big this AI opportunity is for the IT services industry. I didn't have any clear answers in the last earnings season, but then it's a very fast-paced kind of a vertical. Let us see what managements have to say this time around.
Watch, that's the verdict on IT right now. Not completely out of the woods, but time now to take some BTST trades from our technical experts. Naresh, what's the buy today, sell tomorrow idea?
So first would be a buy on City Union Bank. The stock has given a breakout and sustaining well. Stop loss at 168, target price of 176. Second would be a buy on Granules India. Continues in the strong trend. New 52-week high today as well. Stop loss at 497, target price of 515.
Okay, and Kunal, what about your recommendations?
So the first one is buy on City Union Bank with a target of 178, stop loss 166. The stock confirming a breakout about the 170 mark, which is a swing resistance. And RK Forging is the other stock which I would suggest is a buy. The stock completing a bullish flag formation on the daily charts, coming out after 1.5 odd weeks of consolidation. So buy with a target of 990, stop loss at 930.
Okay, so that's a view coming in on some of these BTSC trades. But in the meantime, what else is happening in the market? Apart from financials, not really much. Yes, of course, you have some amount of green coming in on the likes of HFCL, etc. But there's not a huge pocket per se. But the other bit that we have been talking about of late, Dipan, and of course, that's been defense and manufacturing as a theme. Do you think there is a risk that perhaps if there is not as much part of government focus as the street is expecting in budget, some of these stocks can get derated? Or do you think it's just the fundamental structural story of India right now that it is going from strength to strength as far as the entire manufacturing ecosystem is concerned?
So I think defense manufacturing stocks are largely have been well discovered. They are trading at really fancy multiples, whether it's private sector, public sector, and some of them are, of course, delivering on the numbers as well. but the street has discounted these stocks too much into the future. Of course, there is earning visibility, but that also has got discounted. It's I would say, a fast-moving train. Doesn't make sense to get onto that train at this point of time. 25-30% correction for whatever reason may be worth it, but at these levels, I wouldn't advocate getting into any of these defense stocks or railway stocks for that matter.
Right. Okay, that's the take coming in on some of the defense names. In the meantime, like we've been pointing out, some of the other names which are in focus. There's also Purvankara. They bought a 7-acre land parcel in Bangalore with a potential GDV could stand around almost 900 crore rupees. Yesterday, there was an upgrade on an Anantraj Industries. That stock perked up very smartly. And Godrej Properties, in any case, has been a strong one of late. Dipan, how much more legs to the realty rally, and does it seem like there's value on the table right now also to add perhaps into any of these real estate names?
No, I would be a bit cautious on real estate also. Last 12 months, it's being in that segment has been amongst the best performing vertical within the entire stock market, and valuations are on the higher side over there. No doubt they are keeping on adding new projects and new opportunities are coming their way. The turnover per se, new home sales, resales, I think all are shaping up very well. Prices also are holding up very well, and I haven't seen such great trends for real estate industry in decades. But a lot of it has got captured in the stock price. And for an industry which is cyclical, and mind you, it is cyclical in nature, to start paying very high price to earnings, price to book multiples is not a wise strategy. So I just want to wait and watch. Real estate being cyclical, you will have a phase where there could be correction because of actual slowdown in new home sales or new projects, and that may be a good entry point with a long-term view, but not just now.
Okay, so maybe not just now, but long-term view is something to watch out for on real estate pack. Dipan, have you looked at these latest IPOs which are underway, and quite a few at that? For now, we have Bansal Wire, which has got fully subscribed on day one itself, and even Emcure has got great amount of traction. Have you looked at either of the names?
No, I think, but Emcure certainly will keep on our watch list because we're very positive on pharmaceutical companies. I think that pharma industry seems to have entered a new growth phase. Domestic formulation sales are steady. US generic market, there is slightly lesser competitive intensity, newer opportunities opening up over there, and Indian companies are able to manage US FDA inspections far better. Even global pharmaceutical markets are looking up, and rest of the world, excluding US, also revenues are pretty strong. Raw material prices are pretty stable for the industry as a whole. So very bullish on pharma. And in the event of there being some turmoil in the Indian economy or Indian equity markets, pharma is a great defensive play. So any pharma company, and especially I would say a major player like Emcure, will be on our market watch list. But I think the IPO is coming at expensive valuations. Let us see 6 months, 1 year down the line, post reporting 2-3 quarters of earnings, where the valuations are actually standing at.
Right. In fact, just earlier today, we had Rahul Shah from Motilal Oswal, and here's his opinion on Emcure.
Way the markets have been, and I think for a long time we've seen a good IPO coming relating to the markets. So a lot of IPOs in the recent time, but I think there's a very prominent name for quite some time. People were anticipating. So I think good IPO, and I think way they have priced it also very reasonably priced, and some money to be made on the table for the investors. And in a pharma pack, when we are seeing that most of the pharma packs doing quite well, and the way the segment which has been into Emcure is into, so I think all the front they have been firing at this point of time. So my sense is, I think obviously one should allocate for a subscription, and obviously as an investment part of an allocation in their portfolio at this current prices.
Okay, so that's about Emcure, but in the last few minutes, Solar Industries has seen quite a bit of traction. There's Cello World, which is also reacting to that QIP news, and Solar Industries did get one of the big approvals. There's AGM happening tomorrow. All of that is keeping that stock excited, and can't take your eyes away from Castrol, a solid 15% rally. Nuresh, have you been looking at any of these names? Solar Industries, Cello World, even the Castrols of the world?
So Solar and Premier Explosives both have been ancillaries of defense, which have continued to do well. Similar trend compared to the defense names. So continues to look okay. Only time to trim going forward, but not a buy at current levels. Castrol is interesting because today it has seen a very large volume and has finally hit almost a 5-6 year high. The last time the stock was at 230 was back in 2016-18. So looks like a trend change and a momentum shift continues for the stock. Dips to 230 to 220 would still be a buy on Castrol.
Right. Okay. Those are some of the buzzing stocks right now in trade. PFC, REC, of course, it's unending move really on both those stocks. PFC is now clocking a 6% move, REC higher by 4.5%. BHEL, by the way, has scaled up a good 5.5% as well in trade. Kunal, still an entry, you think, BHEL around those 310, 314 odd levels?
Yeah, very bullish on the stock. And in fact, after that sharp correction on 4th of June, the stock had actually given much more better entry points. So, it was consolidating at the 285, 290 mark for quite some time. Even at current levels of 300 plus, I would still believe that it's a very good buy. The stock has not yet confirmed a breakout of the previous size of 322. So, I think in that aspect, even a swing trade over here for another 10 to 15 points on the upside could be something in the offing.
Okay, on that note, Naresh, Kunal, as well as Dipan, we'll let you go. Thanks so much for making time and speaking with us. But talking about big events which are lined up for tomorrow, of course, we talked about the weekly expiry, which is there tomorrow. The fact that the US markets are going to be shut on account of Independence Day. So we won't get any cues for Friday morning from there. Tomorrow is the election as far as UK is concerned. Back home as well, a lot of IPOs underway, and the New York Fed President John Williams is visiting India. So we'll be watching out for all of that. But let me take it across to Simita to get a sense as to what exactly are the issues at hand as far as the UK polls are concerned.
Right, so the UK will hold its first national election in almost 5 years tomorrow. Opinion polls suggest that Indian descent Prime Minister Rishi Sunak's Conservative Party could be punished for failing to deliver on promises made during 14 years of the party being in power. But these past years have been marked by a sluggish economy, declining public services, making the Labour Party race ahead as far as opinion polls are concerned. In fact, its campaign has focused on a single word, and that is change. And that's due to a couple of factors. Number one, the cost of crisis. Well, this is a big election issue. This election, in fact, has been dominated by the cost of living crisis. So slow economic growth coupled with high inflation, high mortgage rates have pushed people to question government's policies. Before Sunak, party member Liz Truss also lasted for just 45 days due to her policies that were stunting economic growth. Number two is immigration. Well, voters also feel that the government has lost control over Britain's borders, given that thousands of asylum seekers have entered the country in recent years. Number three is health. Well, UK's National Health Service is plagued with long waiting lists for everything from dental care to cancer treatment, and hence these are part of election manifestos of both the parties as well, besides issues like an increase in defence spending, raising money, wealth creation and building homes. Now, the Conservative Party says that its economic plan is now working. However, it's been facing one challenge after another: the global financial crisis in 2010, then leaving the European Union, and then the cost of living crisis post the Russia-Ukraine war. So there's that much pressure on Sunak, who called snap elections hoping to benefit from a summer election. Now, from an India standpoint, FTA with India is being seen as high priority for both the parties. In fact, because getting this right will actually mean higher economic growth, increased private sector investment, and both sides have been supporting this. Labour Party has also been claiming to seek a new partnership, including the FTA with India. All eyes now on Friday when the results start trickling in.
If you like this video, then like, share and subscribe to ET Now.